Hey guys, welcome back to the Wall Street Bull. Anthony here. I hope you're all doing well and staying safe out there. Big shout out and thank you to every single one of you who have subscribed to the channel. I really appreciate it. If you're new to the channel, smash the subscribe button down there and turn on that little bell notification as well, because I love documenting my journey with investing, with cryptos, dividend stocks, growth stocks, talking about passive income, building financial freedom. And yes, my goal at the end of the day is to build generational wealth. So come along, it's an incredible journey. We're just getting started. It's incredible. Also, if you can give this video a thumbs up, watch it straight through, it would really help me push this channel out to a lot more people, and I would really appreciate it. Let's get straight into it. Little disclaimer, I am not a financial advisor. Please do your own research and due diligence. It's very important, especially with any kind of investment. You can lose money like that, especially if you don't know what you're doing. Please be careful. Don't invest anything that you can't afford to lose. That's my golden rule. All right, formalities are out of the way. Today is a dividend stock video, ladies and gentlemen. I wouldn't be called the Wall Street Bull otherwise, but here is my stake portfolio. This is where I buy my stocks in Australia. There is a referral link below. If you use that, you can get a stock in Dropbox, GoPro, or Nike. And yes, I've got a significant amount of GoPro, so thank you very much. Let's have a look here. All right, portfolio is sitting at $35,586.34 USD. So this is in US dollars. I've had a slight downturn on 0.18% on the day. I'm not really worried about that because I'm a long-term dividend holder. I'm never going to sell these stocks ever. Like they're generational. This is why I love dividend paying stocks. And again, dividends every single month. I love it, guys. I can't complain about that. So total return, I've had 26%. 26% is incredible because I held throughout the downturn, and I bought the dip, essentially dollar cost averaging every single week. I tend to invest at least 20 to 30% of my income into dividend stocks, and it's been quite difficult because it's been all over the place at the moment. But anyway, let's just have a look here, guys. But these are my holdings at the moment. I've got some dividends sitting in there of $1.47, which is nice. I'm due to receive some significant dividends this month, at the end of this month, and probably next month as well, because obviously the dividend cutoff date, most of my big months are obviously in March. So February, March, correct? So it's going to be an incredible month next month. I'm going to reinvest those dividends as well. Guys, my biggest positions right now are obviously with ExxonMobil. And ExxonMobil has had a pretty incredible last couple of weeks, obviously with the market. In the last month, it's up 16%. So it's $80.21 a share right now. I've got 102 shares of ExxonMobil, and I've had a 63% return on that, which is insane. The dividend yield is 4.5%, which is really nice. My goal is obviously to get something between 2.5% to 5% max. Obviously, because at my age, I need to get more dividends a lot faster. The younger you are, the less of a dividend yield you can go for. When I say that, guys, I mean Apple, for example. I've got 3.7 shares of Apple. That's got a dividend yield of 0.51%. And the reason for that is because they choose to invest those profits back into their business and pay only a small amount to their shareholders. But again, something to consider as well. That's just my opinion as well. My other biggest holding is obviously SPHD, which is an ETF. Exchange traded fund. Now, a lot of people are on cryptos on this channel, but dividend stocks are incredible. They pay me passive income. Now, SPHD is a monthly dividend payer. So basically, I get paid every single month at the end of the month, no matter what happens, and I reinvest those dividends. So $45 is a share of SPHD, which has got a basket of stocks. It is in the S&P 500. So out of that S&P, the 500 companies in the S&P, it picks 50 of the highest dividend yield paying stocks. That's basically it. So if you're lazy and you don't want to go looking for individual stocks, buying an ETF is a good option just to consider. But it's got a dividend yield of 3.17%. I've got 104 shares, and it pays, it's got 14.46% return, and it pays around about, I think I received a dividend not long ago, the other week, of about 12 cents a share. So quite nice, but that pays out every single month as well. And if they have a dividend increase as well, that's awesome, because it's just basically adding to my dividend income every single month. So that's awesome as well. So SPHD. Some other ones I'm looking at the moment, guys, that's actually Intel. There's a lot happening in the crypto space and the just with the microchips and all that kind of stuff with Intel as well. And I think it's incredibly undervalued. Sitting at $47.63 a share right now. It's 2.99% dividend yield, which is a perfect range for me as well. I've had a negative 11% return. I've got 6.7 shares. Definitely going to be buying more of Intel because I think it's incredibly undervalued, and it's one of the only tech stocks as well that obviously that I like that pays dividends. So like other companies like AMD, Nvidia, don't pay dividends. So Intel is nice, and obviously me being such into so much into crypto, I think obviously with the release of their new Bitcoin mining chip, and obviously a lot going on with in the crypto space, I think Intel is incredibly undervalued right now as well. Now, that's pretty much it in terms of my positions. You can see them right there, what I'm holding. So check it out. Go check out some dividend paying stocks if you wish. I'm going to get into my dividend tracking app right now. I've got $1,756 in Australian dollars coming in every single year, and this is growing. And it's awesome to see this compound over time, and I'll show you a chart in a sec. But guys, so here are my top payers. ExxonMobil pays me $506 Australian every year. That pays quarterly, so March, I'll have a look on the charts, I can't remember off the top of my head, but March, April, May, June, and then September, I believe. So we'll get into that in a second, but SPHP pays $228. EPDs are Enterprise Products Partners, which is a midstream company, so they do a lot of transport and gas and stuff like that. $169. O Realty is a REIT, a real estate investment trust, so you're buying commercial real estate with O, and that pays out every month as well, but that pays me on every year $145. AT&T is $105 every year. Now, obviously, there's a lot going on with AT&T at the moment with the Warner Brothers Discovery deal. I think it's still incredibly undervalued because AT&T is a cash printing machine, and they're only going to keep growing. And there is a spin-off happening with this company, so I'm doing a lot more research into that. But I believe for every share that you hold of AT&T, you will get a share of Discovery Warner or whatever it's called. So you'll get a share into that as well. So they're going to keep an eye on that one. Prospect Capital pays me $105, VYM $103, Stag 61, Kimberly Clark, you know, obviously that's Everyday Essentials here, guys, $34, Agencies Finance $25, Walgreen Boots Alliance is medical pharmacies, that pays me $25, Coca-Cola $24. I could keep going on here, but guys, this is what passive income looks like, and it's incredible. They're my biggest positions. Dividends that I'm going to be receiving in the next 2 days. Let's have a look here, guys. OKE's pay me 18 cents. British American Tobacco 24 cents. Again is paying me $1.67. Procter & Gamble is a nice dividend payer, $2.51. EPR Properties 6 cents. O Realty is paying me $12. I receive that every month. Stag $5. Again, another monthly REIT, so industrial REIT. AbbVie $2.20. PBA Main Street Capital. These are the ones coming in 5 days. Now, the one I want to look at is obviously ExxonMobil, which is going to pay me $126. This will allow me to buy, you know, maybe a 1.2, 1.3 shares back in ExxonMobil. So it's the power of compounding. When you can get it to the point where when you get the dividend, it basically buys in like 4 or 5 shares, that's power right there, man. That's what I love to see. Now, I've got a goal of $100,000 a year in dividend income. That's going to take some time to get there, obviously, but I increased it, so I've got 2% of that goal. 29% of my dividends comes from energies, minerals companies. Dividends receivable this month is $170, so I'm waiting for that. Here is my portfolio value in Australian dollars. It's down a little bit, $49,785.09. I've had a total return of 24%, which is $9,700 in Australian dollars. So that's incredible as well. So to see that return is insane. A little bit different from cryptos. These are all my positions right here. If I scroll down to this app, by the way, which is incredible. It's on the App Store. I'm not affiliated with them at all. In 10 years, if I just reinvested the dividends completely, didn't put any more of my money, the portfolio would be worth $82,000, and it would pay me $5,400 a year, which is insane. But the power of compounding comes after a long time. This is why I say I'm a long-term investor. The portfolio is going to be worth $242,000, and it will pay me an annual income of $26,000. That's roughly about $300 to $400 a week, completely passive. So that's going to help, and that grows as well. As the company price grows, the dividend grows. They have dividend increases as well. For example, if you go to ExxonMobil, you can see here what happens in terms of the dividends. So you've got 82 cents, 87 cents, and you can see here sometimes they increase, on some companies they increase. ExxonMobil's been pretty flat. There you go, just 88 cents. You can see that. So they did increase that dividend slightly by 1 cent. And that does have an impact on your portfolio. Some other companies that have been pretty good with dividend increases is Walgreen Boots Alliance. I can't even pronounce it. Go down to their dividends. So you can see here 44 cents, 45.8. You can see here the increases over the years, which is nice, 46.8. And if you keep scrolling down here, 47.8. So as of last year, they increased their dividends, which increases your dividend income. That's why I love dividend stocks. Now, monthly income. So March is going to be the big one. So obviously, months that I'm down, I need to build up on. January, April, July, and October, and obviously January next year are quiet months for me. But you can see on average I'm earning $147 a month, which is nice. June is a big month. March is another big month here. So again, these ones I'm going to be paid. Ford is paying me dividends. WFC, Intel's $3.44, VLO, PFE, VCLT, TLT, J&J, which is Johnson & Johnson, ExxonMobil, $126, and the rest of the dividends here. But guys, this is what happens. So I love dividend investing because it's completely passive. You buy, you hold, you reinvest, and you let it grow. That's it. That's pretty much in terms of my dividend portfolio and my stake portfolio. Check it out, do your research. But this is why I love dividend income, because it's completely passive. Who doesn't like making money in their sleep? Awesome stuff. All right, that's it. We'll speak soon. Have a good weekend, guys. Peace. Bye.